Welcome, everyone. We are again have a great video today talking about inflation, but from a different angle. I know inflation has been quite the cloud overhanging for the last couple of years. We want to look at the silver lining here, Kevin. Inflation is certainly bad, but a handful of positive outcomes that could actually help Canadian retirees. And I'm going to start off with the big guns right out of the gate, Kevin, starting with the TFSA.
Yeah, TFSA, again, this has been since day one. We've had this listed as an inflation-oriented scenario for how you're going to get those movements up. Started at 5,000, went to 5,500, 6,500. But again, inflation can have a huge factor. We've had limited inflation for the last little while, but in 2022, we had some huge inflation. So as you can see by this chart, you had that 5,000 for a while, 5,500 stayed, so did 6,000, but this year, 6,500, and next year it is projected to go to 7,000. So you're getting $1,000 increase in a 2-year time frame where it's taken, 10 years to get that sort of same movement over the last decade. So as you can see, even though inflation's been bad, it is increasing the amount that you can actually put away in your TFSA. That can be a huge factor for people going forward. As you get 7,000, maybe 7,500 coming sooner than later, the more money you can put away tax sheltered, the better off it's going to help your plan down the long road.
Silver lining, right? Silver lining.
Yep.
So you can see right on the chart there, it stayed at that level for a long time, at the 5,000 level, and then the 5,500 level, 6,000 for a number of years. And then within 2 years, we get $1,000 bump. And that's per person, that's per year, and it just continues to carry forward. And that is solely a result of inflation, right? That's one of the things that sets the limit. I say one because it's political. There's other reasons that get in there, but one of them is it's tethered to inflation. So when you get periods of high inflation, you get a little bit of bump in the expected number. I'm saying expected because Sierra has not confirmed it yet. So highly projected, highly expected, you get a bump for next year's TFSA as well. So that's certainly one of the items. Another, Kevin, and people always like to get a raise when it comes to their pension. Well, if you're collecting the Canada Pension Plan, the CPP, it's indexed to inflation. So you got a raise in 2023 and should expect another raise in 2024.
Yeah, because we had such high inflation in 2022 before it started to come down with all the interest rate increases. As you can see, the benefit for this year, 6.3%. That is a large increase to have, especially depending on how much money you're getting. And we're looking at almost another 5% with 4.7 in 2024. We have done videos beforehand where we've mentioned, again, one of the advantages to delaying it to say 65 is because you not only get the increases and save off of what would be clawed back, but the inflation that you can get out of there for the indexing to get those percentage increases really can help what you're going to get at that time frame. So again, this is another silver lining. If you are getting and collecting this government, or not government, but CPP benefit that you've been be able to access, you are getting that big increase going forward. And that is a nice factor to have because it is keeping up with inflation, or in some cases, maybe increasing beyond what inflation is at the present time frame.
Yeah, and we've got lots of videos on CPP OAS. We'll link to a CPP video here. But you're absolutely correct. Often we tell folks, well, it's a guaranteed pension, it's well-funded, it's indexed, and now we're seeing the kind of the proof in the pudding. Why people want to have a decent CPPs, you get these kind of benefits. It automatically increases as inflation rises as well. So you had a nice benefit last year, or this year, I guess, 2023.
This year.
6.3%. Expected to get 4.7 additional % of an increase in 2024. And then talking taxes, we'll go back to that, a silver lining, looking at indexation, how the old age security. So a different pension, you got the Canadian pension plan, that's the one you and I pay into, the employer pays into, and then you have old age security. That one's different. No one pays into it directly. It's funded by tax revenue. And then they have this pesky thing called the clawback, Kevin, this recovery tax. And essentially how it works is you pay taxes, you retire, you start collecting old age security. But if your income's above a certain threshold, they start taking it back. It's like an extra tax once you're above that threshold. And that number, that threshold, continues to go up, inflation being one of the things that gets factored into how that threshold gets set. And you can see in the last 2 years there's been a pretty big jump in the threshold. And that could save people a lot of tax because that number got extended. It's now the threshold much higher, which means people will be able to keep more of their old age security.
Yeah, I mean, that assumption from the government is that as inflation goes up, everybody's wages are probably going up and everything else. So you have to keep intact with that. And be able to do that, they have to raise what that clawback limit is. So again, I mean, as we can see, it's about $11,000 over the last 4 years. That can be a huge increase going forward. I mean, especially if you're not getting that much more coming out of the fact of your retirement savings or whatever the case may be, then this is allowing you to actually get more income in the year without having to worry about anything going on in your OAS. And it's huge to try and keep as much of that as you possibly can. So where we were talking 4 years ago about maybe 80,000 you claw back, now we're talking over 90,000 projected for 2024. That 10,000 increase can be very big come time that you need money to be able to do things that you want to do in retirement.
Absolutely. It allows you to have more retirement income. And if there's inflation, you might need more income to maintain your purchasing power. And you're not going to have to pay additional tax in terms of an OAS clawback with that higher income. So that's certainly a plus. And like you mentioned, there's been a big jump in that threshold. Questions of this nature, OAS clawback, CPP, how it works with taxes in the plan. We get questions like that all the time, and we're happy to help out. If you have a question, visit chatwithclintonkevin.com. You can see it on the screen there. Fill in the form, comes right to us. We'd certainly love to hear from you. Happy to take any questions. And we're talking tax here, Kevin. So the fourth silver lining that we got to mention is certainly going to be tax related. I'll pull this up. This is combined Manitoba and federal tax brackets. It's from taxtips.ca. So if you're from another province, you can go to taxtips.ca and see a similar comparison from 2023 to 2024. But the idea here, tax brackets have been increasing, Kevin, which means you pay a little less tax, even if you have higher income.
Yeah, I mean, and that's a big factor, right? I mean, everybody's got to assume the same thing. If inflation's there, you got to earn more because everything costs a little more money. Well, if they kept the old tax brackets, yeah, you're earning more money, but you're losing more of it to the government if everything maintains the same. So even these are indexed to a point as well. As we can see, specifically in that first category, you've added, just over $10,000 in that same tax bracket. So beforehand, if you're earning 36, you pay at a certain rate. Now, if you're in 47, you're still paying at that same rate. So that's a little more money in your pocket at the end of the day that you're not giving to tax. And these brackets, of course, they're still the same sort of scenario, but those numbers jump up. You'll see the fourth one is a very similar play where you've got a larger increase before you start having to pay more percentage in tax on each amount going over that thing. And that can be huge to somebody for what their after-tax money is that they can spend going forward.
Yeah, and the rates themselves did not change. Essentially, they just shift the brackets higher. So if you have the same income, you're now going to could be at a lower rate because the brackets have moved up and the rates have stayed the same. Should mention in Manitoba, there was a budget that tweaked the brackets in 2023, plus the inflation adjustments. The Manitoba brackets could see more movement than other provinces because you had the budget plus you had these inflation factors that tweak the brackets, but still that would be another area where you could see a silver lining to inflation. The fact the brackets get bigger, which means the rates would likely stay the same. You'd end up paying a little less tax for the same amount of income. And we'll get to the fifth silver lining here, Kevin. I imagine this is the biggest one for many folks. We've heard this complaint for, I got to say 15 years at this point. The fact that if you're in retirement or nearing retirement, you want some safety, you want some guaranteed income, you essentially could not do it until about mid-2022, until recently.
Yeah, I mean, basically what we're talking about here is as you saw inflation go up, well, how do you compensate that? You increase interest rates. And when you increase interest rates, you give people a fixed amount of return that they can deal with. And as you can see, just based on this here, even though the 5-year nowadays on the guaranteed investment looks at around that just under 4, just go back to 2022, you were over 5% that you could get on a 5-year guaranteed rate. We have not had that in decades where you've been able to get that sort of a scenario. And now people can, for the first time in a while, probably get a real rate of return on some form of a guaranteed investment. And that's huge for people, as opposed to maybe I make this, maybe I make that. I can go into the bank, maybe I can get 5% on my GIC. This is great because this is money that is above inflation at the moment and can pay you a decent rate of return.
And I'll explain what's on the screen here. This is from Tangerine. I only picked Tangerine because they have a historical rate, so they allow you to go back in time. And every time they change their rate, you can see the date, and then they'll put the new rate there. So it's not that it's a special one. It's just that they had the full history, so it allows us to make the point here. So you can see the rate started going up in 2022. And like Kevin said, they got above 5%. And we're looking at the 5-year here specifically, the 5-year term. But look at this, Kevin. You go back to the beginning of 2022, and you're in the 1-2% zone. So that's not that long ago. And then I'll scroll down. You can see they just got flatline there in the 3 and under zone for, decades.
Forever.
This particular history from Tangerine goes all the way back to 2007. You'll note there is no 5%. Even back as far as May of 2007. So you had 4% in the 2007 zone. Then you had the Great Recession of 08, and then rates just didn't budge until mid 2022. So if you want a silver lining to inflation, The only reason we have rates that finally move back up, and I appreciate if you're on the other end, you're paying a mortgage, it's not as much fun. The silver lining is that if you do have some money and you actually want to put it aside, you can now get some kind of interest on that savings, which just was not a possibility until recently. And it's the high inflation that created that scenario. So again, inflation itself, not a great thing. I would prefer not to have to endure high levels of inflation. Silver lining, there's a couple. We just mentioned 5 of them. If you like this video, I should mention we have another one on inflation. We got a couple on inflation, like the one on the screen right now on how to hedge inflation. Click on that video. We'll see you again very soon.
Take care.